Before every big move, price needs to collect liquidity. I know everybody is talking about liquidity, but in this video, I will change your perception about liquidity. Unlike what most people believe, liquidity is not only below specific low or above specific high. It is basically everywhere, but only if you know where to look for it. If you always wait price to clean highs or lows, I assure you, you will miss 90% of the moves. So let's start. First, I need you to add two indicators. The first one is called YMWD, this one. You can click indicators and you can type YMWD. This is a free indicator. Make sure you add it to your indicators. Just so you know, I don't use indicators to execute any trade. I don't let them affect my trading decisions because they are all useless. I only use indicators such as this one to define opening levels, measuring ranges, measuring baits, or where liquidity lays. Make sure you do the same. You should never take trade based on some moving averages crossing or RSI divergence. These might work once in a while, but in long run, they won't keep you profitable. After you add the indicator, you can do the settings as I do. So what is the purpose of this tool? I am using this tool to highlight where the monthly opening days are. You don't need to select yearly. You can only show monthly. You can choose any color you like and do the rest based on this. So let me show you how it works. As you can see on the chart, this vertical green lines represents the first opening day of each month. So why do I use them? Because when price opens, new quarter, new month, new week, or new day, first it goes to liquidity pools. After it collects enough liquidity with price manipulation, price push to the opposite side and make the main move. You will understand better when we analyze the chart. So let's start from December 1st. New month started right here. It pushed down. While doing this move, it created fear, but also it took all these months' liquidity. Here it's been going sideways, and on December they pushed price for the last time, and it's slightly reversed here. I will zoom in here. So in next month, January, price opened, slightly went up, then came down and took this liquidity, which is previous monthly low. You can see better right here. A new month started, price pushed down, took previous month's liquidity and sent it to the opposite side. So this was January, and here February starts, push prices up, take this month's liquidity, this one and this one. You can see better right here. Then send it down and made sideways. So February also ended here. As you can see, price didn't move significantly here, and March starts right here, pushes down, take previous month's liquidity right here. Then sends price to the opposite side, then again sideways. And April starts, which is second quarterly opening. Let's clean the chart. I will define second quarterly opening level right here. This is April 1st. They pushed price, they took this intermediate liquidity here that belongs to previous month right here. Then they sent it up and price came down to take previous month's low. After grabbing this previous month's low, they pushed price again and it continued sideways. As you can see, after June starts, it touches this April opening level right on the tick. Then it sends price to grab this previous month's liquidity. And after collecting this last low's liquidity, price starts another leg up. This was the main logic. So how you can use this? When a new month starts, mostly first 10 days, price goes to liquidity pools. After grabbing the liquidity, they push price to the opposite side. So when you start analyzing, you should always define the previous monthly high and low, just like this. This is low and this is high. So you can see better, these green vertical lines help me see monthly range so that I can define each month's high and low. Every time price takes previous month low, as you can see here, it had reaction to the upside. But when we see the overall trend here, in bigger time frame, price made reversal right here. It's been pushing down for months. They created this range and they pushed price below this liquidity pool. This is the main liquidity pool. This is not like our monthly ranges. This is much bigger than monthly liquidity pools. Price has been going down for months. Then about 6-7 months, it went kind of sideways. Then they pushed price below this liquidity pool, then it turned back. So this is a sign that we can see reversal in this price. After this leg up, we are not as bearish as this leg down. So you cannot just memorize what I teach here by only reading liquidity sweeps right here. Okay, we took the low and it pushed price to the upside, but you need to see the big picture right here. What is happening? If you have come to this point, I will give you much better tip. So let me show you how I do that. So first, let me clean these yellow drawings. I start by using Fibonacci tools. I draw Fibonacci from last specific high to last specific low. So why I'm doing this? Because I know that in algorithmic logic, you can see here last 6-7 months, price respected this range. So by this logic, price will respect this range also next 6-7 months, which gives me equilibrium of this range. And that is the 50% of our range. You can see how price is respecting half of the range. An interesting part is price also respected right here before creating this low. So you can even assume that where price might even stop. You should never take trade based on this low assumption, but you can set alarm right here, watch price if it tries to make reversal right here, so that you can aim the 0.5 level. After I measure this range, I will measure the lower portion of that range in the same way. And now you can see much better how price is moving according to this range. So how it will help us? When price is crossing this 0.5 levels, it is gaining momentum. If it can stay above this 0.5 levels, that will give price enough momentum to visit another 0.5 level. Let's take a closer look. Price came up in this 0.5 level and pushed price to the other 0.5 level. Came down, got rejected, and almost from 0.5 level went up again to this 0.5 level and made sideways. And the next month starts, takes low of this previous month, then push price to the other 0.5 level. Then again, same thing. So when we come down below this 0.5 level, there is liquidity. If you see that price is having resistance to go down and stays above this 0.5 level, you should aim other 0.5 levels, which is right here. So you should always define monthly liquidity pools, which is high and low, but never forget to look for big picture, which is this low, because when price drops like this, you don't look for previous month's liquidity right here, because this is much bigger liquidity pool. Not only 1 month, it's actually 7 months right here. So you don't just expect price to come down a little bit, clean 7 months liquidity and push to the opposite side. There are charts that does that, but you need to have confirmation. You cannot just assume price will take 7 months worth liquidity then immediately go up. So it needs to clean like this. When you see the reversal, then you can aim our target, which is 0.5 levels right here. This is how price moves. It needs to collect liquidity, then it can go to opposite side. This smaller picture liquidity sweeps doesn't define that price will have reversal from here. This big move defines that. When price got rejected right here in the big picture, then we expected reversal from here. But if we didn't see the price is staying at 0.5 level, I wouldn't expect reversal. You need to see price is winning this level. You cannot be sure that if price will reverse after taking this month's liquidity or this month's liquidity. You need to see the price is not willing to go down. Now I suggest you to go and backtest this strategy on your chart. Make sure you define the monthly opening days by using our indicator right here. I will show you once again. You can just type this to indicators, then define highs and lows, then see the big picture. I was showing all this in a daily chart, but you should start from monthly, weekly, then go to daily chart. I hope you enjoyed the video. If you believe that this video changed your perspective in trading a little bit, please hit the like and subscribe. There are a lot more coming.